Today, our stock analysis will focus on the pharmaceutical company Bristol-Myers, ticker BMY. The company stock price has dropped nearly 40% over the past year, as several of their key drug patents are set to expire, though the company says they have several new promising drugs in development. Now, let's take a quick minute and look at their financials first. And we can see a good amount of red, signifying year-over-year decline. And starting off with revenue, that has happened for the past 2 years. And for 2023, it's the lowest since 2020. But since 2014, revenue is up nearly 200%. Next, net income and earnings per share. Several down years in red over the past decade, with 2020 being negative. Though the bright spot is for the most recent fiscal year 2023, this is the highest, with net income up nearly 300%, while earnings per share increased about 220%. Though, I just want to point out their Q1 2024 results are negative for net income and earnings per share, so something to consider. Next, dividends consistently increasing over the past 10 years, a sign that we want to see. And management has indicated that they're committed to this dividend, and it's increased by more than 50% from $1.45 to $2.31. Then share count. Though from 2020, it has been declining. However, since 2014, it has increased about 25%. So something I really don't want to see for an established company like Bristol-Myers. Finally, free cash flow positive through the last 10 years and being more than 10 billion for the last 4 years, and up almost 400% from 2014, from 2.6 billion to 12.6 billion. Now let's jump down and perform a stock valuation. Here's the valuation setup, and we will look at a few scenarios. But first, I want to point out right in the middle here the margin of safety and using 75%. This is because, as I mentioned earlier, a few of their key patents are expiring soon. And also, when we looked at their financials, the net income and earnings per share can be choppy, including their Q1 2024 results, which are negative. Though those data points are negative, we can see up here in the top right, the net income CAGR over the last 10 years. 16.6%, while earnings per share CAGR'd at 13.8%. But for this first scenario, I am being a little more conservative and using only a 3% short-term growth rate over the next 10 years with a 10% discount rate and a 3% long-term growth rate. And this gives us an intrinsic value of $52.45. And with that 75% margin of safety, brings it down to $39.34. So the stock price is currently trading around $42. So pretty close to that margin of safety, just right above it. So definitely seems like it's some opportunity here. But let's raise that short-term growth rate. Let's go probably maybe a little more reasonable. Let's jump that up to 8% and see how that impacts the valuation. With the 8% short-term growth rate, intrinsic value jumps up to $77.69, and with a 75% margin of safety, brings it down to $58.27. So based on this, definitely looks like a good opportunity. As I mentioned, stock's currently trading at $42. However, remember, need to keep in mind about these patents that are expiring, what's going to happen with their revenue, and the new drugs they're trying to bring to market, when or if they are even going to get approved. So there is some concerns there. But let's look at one other scenario. And as we saw up here with these CAGRs for net income and earnings per share, we're not going to quite go that high. But let's jump up our short-term growth rate to 12% and see what happens. With a 12% short-term growth rate, intrinsic value jumps up to $106.88. And with that 75% margin of safety, brings it down to $80.16. Now, about 5 years ago, the stock was trading in that high $70 range. So unless they're showing some promising results with these new drugs, not sure when we're actually going to see the stock price get that high. It may take several more years. It may get back up to $50, $60. But definitely looking like opportunity here. But let's look at a few other data points before we move on. First, the PE ratio. Because the Q1 2024 net income is negative, we're not seeing a PE. But moving on, the long-term debt to free cash flow, I like to see under 3. We can see 2.9. So good sign there. Dividends, as we've seen in their financials, they've increased consistently over the past 10 years and up nearly 60%. So another good sign. Dividend yield. So at the current stock price, you're getting almost a 6% yield, so very good there. So if you're a dividend investor, definitely an opportunity. Though the share counts, as I mentioned during the financials over the past 4 or 5 years, it has been on the decline, but over the past 10 years, it is up almost 25%. So that is a little concerning. But good news is over the last 4 or 5 years, it has been declining. And then net profit margin, I like seeing over 10%. See, over the past 10 years, the average just over 11%. And the last 3 years, about 15.5%. So good sign there on their margins. And one other data point I always like looking at is return on invested capital. Very important for an investor. And again, I like seeing 10% or higher. We see they're generally in that high single digit range, just below 10%. 10 years ago, 8.8. 3 years ago, 9. The 1 year, just over 11. Though the 5 year is just below 5%, but still pretty good overall, as most of these are in that high single digit range around 10%. So it does look like an opportunity to buy into Bristol-Myers, but there are the concerns with the expiring drug patents coming up and how that's going to impact their revenue. However, they have those few new drugs in trial, but until they can show positive results or get FDA approval, it might be a while until the stock price shows a strong recovery. But let's move on and look at my portfolio performance next. Here's the portfolio's overall performance, and the first investment I'll point out is Smith & Wesson, SWBI. They released their full year 2024 results the other day, and I don't believe it was that terrible, but the market value dropped by about 12%. So this is something I've owned for a few years now, and I am debating if it's time to sell. Next, Acuity Brands, AYI. They have earnings coming up in a few days, so I am looking forward to that. I've owned this stock since late last year, and it has performed very well. And then PayPal, this stock just can't find any traction. The last one to point out is Lockheed Martin, LMT. I bought this on a dip a while back, and now I am looking to sell, but I would have to pay a good amount of capital gains, so that's kind of what's slowing me back from actually selling out of that position. Now, I hope you enjoyed this video, got some useful information, and I hope to see you next time. Thanks for watching.